Hey guys, welcome back to another video, and today we're going to be talking about Kraft Heinz stock, or KHC. And we're going to talk about where I think this stock might be headed over the next coming weeks. So this stock, since its IPO, has been absolutely hammered. It dropped almost 80% from its IPO highs. And now for pretty much the past year, the stock's basically been consolidating in this range down here, where we've kind of actually built out this inverse head and shoulders here. You've got the left shoulder here, the head here, and then the right shoulder right over here. And the stock is actually broken out of this inverse head and shoulders, and it's actually back tested it right here, which would have been a good buying opportunity if I was paying attention to the stock at this time, but I still think you have a decent entry even buying up here. So where I think the stock heads is going to be the 161.8% extension of its recent range that it's been in, which is sits at around 42 a share. There'll most likely be a pretty large supply zone once we get up to this level, but I think it's very likely we do at least see this level over the next coming week. Usually when you get a breakout, the first places you want to watch are this 138.2% extension and this 161.8% extension. So right now, a way I think you can go about trading this stock is you could buy here at 35.50. You're risking about 2 points. You'd stop out if we break below these lows here, and we should get a move up to around this $39 level before really finding any supply. What I would look to do here is actually trim half a position here, because occasionally you do reject at this 138.2% extension. There is usually a decent amount of supply here, so I'd look to trim half here and then ride the rest of this 161.8% extension, where I'd most likely look to unload the rest of my position. But no, yeah, this is a great setup. I think you do get a move to around $39 to $42 a share. I think there's a very, very high likelihood we see that over the next coming week. And I think you have a very good risk-reward entry if you stop out if we drop back below these lows here. Now, hopping over to the options chain here, I did actually want to discuss an options trade I really like and I think offers a good risk-to-reward ratio. So right now, these October $40 calls are going for around 30 cents. I think these can see upwards of 2 in premium. I think there's a good chance we see 42 a share over the next coming 2 months to tag that 161.8% extension, so I would look to buy these $40 calls if I can get a fill anywhere around 20 cents. With options, that gives me a 1 to 10 risk to reward in the trade, so for every dollar I'm risking, I have the chance to make 10. I think utilizing options in this trade gives you a really good risk to reward ratio, and I think there's a good chance these can see 2 in premium. Again, it totally depends on the strategy you use. Under my own options account, I try and target 1 to 10 risk to reward trades, and I like to keep my portfolio risk at about 5% per trade. So again, I'm not over risking here. I think this is a good trade, and I think these could very, very possibly see 2 in premium if we see that 161.8% extension get hit. Another way I think you could go around trading this is to sell some puts. I think you could sell these $35 puts. Again, I think that gives you a good chance to collect some premium on this trade, and obviously you could hedge that same position with some call options. But I think there's a couple ways you can go around trading this. I really personally like these $40 calls, and I'll probably take them if I can get a fill anywhere at or below 20 cents. So yeah, anyways, that's my views on Kraft Heinz. I think you get a short-term move up to around 42 a share. I'll be looking to take some call options, and I'll probably look to take a long position in the equity as well. And that'll be how I go around trading the stock. Anyways, thank you so much for watching the video, and make sure you subscribe and leave a like.